There are four key players in LVTS, each of which plays an important role in supporting its operations: the CPA, SWIFT, the Bank of Canada, and LVTS participants. Let's take a look at each of these parties and the roles they play. The first and foremost key player is the CPA, the owner and operator of LVTS. This differs from clearing arrangements in most other countries, where the high-value system is usually operated by the central bank. With this in mind, the CPA carries major responsibilities for LVTS. The first of these is the administration of the system. This includes running LVTS on a daily basis, ensuring the security of the system, keeping the system up to date and compliant with legal requirements, coordinating the various participant groups, publishing rules and guidelines, providing ongoing training to participants, and improving the system as necessary. The second key player in LVTS is SWIFT, the Society for Worldwide Interbank Financial Telecommunication. SWIFT provides the payments network over which LVTS participants exchange payment instructions and also provides monitoring of the network for payment processing. SWIFT is also responsible for overall management and maintenance of the standard message types, or MTs, that are processed through LVTS. The third key player in LVTS is the Bank of Canada, which plays a number of important roles. From an operational perspective, the bank is a participant, just like the other financial institutions taking part in LVTS. It must prepare, submit, and reconcile its payments on behalf of its customers, such as the Government of Canada and other central banks, in the same manner as any other FI. The Bank of Canada is also responsible for monitoring settlement positions of the participants, as well as determining which instruments are eligible to be pledged as collateral for LVTS. Earlier, we mentioned that the Bank of Canada also uses the LVTS to implement monetary policy and control inflation in Canada. Here's how. During a typical business day, FIs that participate in LVTS send payments back and forth to each other through the system. At the end of the day, some FIs will have sent more value in LVTS payments than they've received, while others will have received more value than they've sent. Since LVTS participants are not allowed to have a negative LVTS balance at the end of the day, FIs in a negative or short position will need to borrow funds until the next day to settle their obligations. FIs in a positive or long position can either deposit those funds overnight at the Bank of Canada or lend funds to one or more FIs who find themselves in a short position on a one-day overnight basis. The Bank of Canada sets a target for the overnight interest rate on these loans and deposits. The target for the overnight rate influences the interest rates charged by FIs to their customers for other short-term loans and mortgages, so the Bank of Canada chooses a rate it believes will help keep future inflation low, stable, and predictable. Let's take a closer look. At the center of a 50 basis point operating band is the target for the overnight rate. The bank rate, at the top of the operating band, is the interest rate that the Bank of Canada charges on one-day loans to FIs in a short position. The deposit rate, at the bottom of the band, is the interest rate that the Bank of Canada will pay FIs in a long position that deposit these funds with the central bank overnight. Now let's see this monetary policy in action. FI number 1 is in a long position. They've received $500 million more in LVTS payments than they've sent out that day. They know that the Bank of Canada will pay them 3.75% interest on these funds if they leave them on deposit overnight. FI number 2 is in a short position. They've sent out $250 million more in LVTS payments than they've received that day. They know that they will need to fully collateralize an overnight loan from the Bank of Canada at 4.25% interest to cover this short position. But they have another option available to them. FI number 2 can request a $250 million loan from FI number 1. If FI number 1 agrees, based on its risk tolerance and credit limits, it will send a $250 million LVTS payment for that amount to FI number 2. Typically, FIs charge interest for these loans at or near the overnight rate, and the loans are usually uncollateralized. In this scenario, both sides gain a 0.25 percentage point advantage. FI number 1 will earn 4% interest on the funds it lends to FI number 2, as opposed to the 3.75% it would earn from those funds on an overnight deposit at the Bank of Canada. FI number 2 will only pay 4% on the loan from FI number 1, as opposed to the 4.25% it would pay the Bank of Canada for an overnight advance. The overnight rate typically stays within the operating band, since participants know they will earn at least the bank rate less 50 basis points on positive balances, and that they will not have to pay more than the bank rate on loans to cover their negative balances. Knowing the overnight rate in turn influences the rates that FIs will charge their own customers for short-term loans and mortgages. The fourth key player is the group of CPA member FIs who directly participate in LVTS. These include all of the major domestic chartered banks, some foreign bank branches, and other financial institutions. A complete list of the direct participants in LVTS is available on the CPA website, www.cdnpay.ca. These direct participants make LVTS payments on behalf of themselves and their clients. Other CPA members that need to make payments through LVTS enter into arrangements with one of the direct participants. Participants are responsible for pledging required collateral to the Bank of Canada and confirming how it is to be allocated and managed. Payments units of participating FIs are responsible for preparing payment transactions, while cash management representatives forecast and manage their FIs' positions during the day, ensuring that sufficient collateral exists to meet that day's payment needs. Participants also contribute to the various CPA advisory committees used to capture feedback on the operation of LVTS. LVTS